If we talk about the undisputed leader in the Thai telecom market, ADVANC has to be number one in every aspect. But in an era where the mobile and broadband market is entering saturation mode and major competitors have merged, can ADVANC maintain its leading position and grow its ARPU, average revenue per user, in its Q3 2025 results? And most importantly, is this dividend stock still reliable? Today, we're taking a deep dive into AIS. Hello and welcome to the Deep Dive.
That's a perfect summary, really. Captures the core attention. Telecoms, they're usually seen as these stable, almost utility-like infrastructure funds, consistent cash flow, mature market. But right now, they're navigating some really big shifts all at once. You've got the market saturation, like you said, then there's 5G requiring huge investment. And on top of that, regulatory changes, spectrum costs evolving, and yeah, that big competitor merger changing the whole landscape.
Right, that's the conflict, isn't it? The classic telecom model, you'd expect slowing returns, maybe stable dividends, but then ADVANC drops these Q3 results that are, well, spectacular. A 37% profit surge in this market. That takes some explaining. It suggests some serious management skills, some real surgical efficiency going on. So, our mission today, a detailed fundamental look at ADVANC, or AIS. We're focusing on the latest Q3 2025 data. We'll break it down into those 5 key areas for investors: earnings, the growth drivers, future strategy, what analysts think, and of course, the dividends.
Exactly. We need to unpack how they pulled that off. Because like you said, just growing revenue a bit in a mature market doesn't get you a 37% jump on the bottom line. It just doesn't. The story here seems to be this convergence. You've got structural cost relief hitting at the same time as this relentless focus on, let's say, quality customers, not just any customer.
Okay, let's jump straight into section 2 then. Those Q3 numbers, they really did grab headlines. Massive profit surge. What were the main figures?
Yeah, the headline number is definitely eye-catching. You don't often see this in this sector, not at this scale. ADVANC reported a Q3 2025 net profit of 12,038.86 million Thai baht. Now, put that in context. That's a massive 37% growth compared to the same quarter last year, year over year. For a market leader in a mature industry, well, that kind of acceleration is pretty phenomenal.
Phenomenal for one quarter, sure. But investors always ask, was it just a blip, a one-off? What about the quarter-on-quarter momentum? Was that strong too?
Good question. And the sequential growth suggests no, it wasn't just luck or seasonality. Net profit still grew 9.6% compared to the previous quarter, Q2. And importantly, the normal operating profit, stripping out things like currency fluctuations, that was 11,990 million baht, up 10% quarter on quarter. When both the headline profit and the underlying operating profit are accelerating like that sequentially, it signals real, sustained momentum, healthy operations.
Okay, and stepping back for the bigger picture, the first 9 months of 2025, how does the year look overall?
The 9-month picture, it's a powerhouse performance, frankly. Total net profit for those 9 months hit 33,604.27 million baht. That's up a very solid 30% year over year. And this strength, it's coming from the core business. Mobile and fixed broadband together brought in about 128.5 billion baht in core service revenue. That's up 6.7% year over year. So yeah, they're having a really strong year financially, beating expectations.
All right, let's break down the inputs driving that profit. Revenue and efficiency. How did the top line look, and how good were they at converting revenue into, say, EBITDA?
Okay, total revenue for Q3 was 54,362 million baht. That's respectable growth, 4.1% year over year. But here's the interesting part. This growth happened even though they saw some revenue reduction from that partnership with NT, the state telecom company, so the core commercial engine. Probably even stronger than that 4.1% suggests.
And their efficiency, EBITDA. Seems like they're setting benchmarks there.
Exceptionally strong. It really speaks to their operational discipline. Q3 EBITDA reached 31,406 million baht. That's a solid 10% increase year over year. And crucially, the EBITDA margin was remarkable, 57.8%. That's very high. For the full 9 months, EBITDA grew 8.5% year over year. This high and growing margin, that's the operational mastery metric, really. It shows they're expanding the business while really clamping down on costs, getting impressive leverage.
Before we get into the cost side details, what does this mean for shareholders? The EPS, earnings per share, did they hit the mark? Beat expectation?
They delivered a beat, yes. It was slight but meaningful. Reported EPS for Q3 came in at 3.69 Thai baht. That was just above the market consensus forecast, which was around 3.63 baht. And that beat, even if small, is important. It shows that the operational performance and the cost control flowed directly through to shareholder value right away.
Okay, and looking just ahead, what are analysts thinking for Q4 2025, the next quarter?
The forecast suggests continued stability. maybe slightly cooler after that huge Q3 surge, which is natural. Expected EPS for Q4 is currently pegged around 3.54 baht. Still a very healthy number. It sort of confirms that the underlying profitability is sustainable, especially now they're heading into a period with the full benefit of those cost savings we need to talk about.
Right. That brings us to the core of Section 2, cost management. Because if revenue grew about 4%, but profits surged 37%, the story has to be costs, right?
Yeah.
Cost control must have been the primary driver here.
Absolutely, the definitive conclusion. And importantly, it's a structural story. This isn't just, tightening the belt for a quarter. That amazing profit growth wasn't just about selling more phone plans. It was significantly fueled by aggressive structural cost control. And that flowed almost straight to the bottom line. Very little leakage.
Okay, so let's nail down the biggest piece of that structural shift, the spectrum cost reduction. This sounds crucial for the long term.
It is. The single biggest contributor was the drop in depreciation and amortization D&A. D&A fell 4.6% year-on-year. Why? Because of a massive pre-planned structural event. The 2100 MHz spectrum interconnectivity contract with NT, it expired, August 2025. This cost, which had been a big, predictable drag on cash flow for years, basically vanished from the expense sheet permanently.
Wow. Okay, so that's not a temporary saving. That fundamentally changes their operating cost base going forward. What does that do for operational leverage?
Creates enormous leverage. Think of it like a huge monthly bill just disappearing. That extra cash flow, it can go two places. One, back to shareholders, we'll get to dividends. And two, it gives them way more flexibility for capital expenditure, for CapEx. This new cost structure makes them much more agile, more resilient than competitors who might still have higher ongoing spectrum costs. This structural relief is, arguably, a huge factor in the market's renewed confidence in ADVANC.
Okay, beyond that huge D&A drop, were there other, maybe more granular savings that helped push up profits?
Yes, the control was pretty broad, showing discipline across the board. They saw a 1.8% drop in network OpEx, operating expenses. Again, partly due to those NT partnership costs falling away, but also they benefited from lower electricity costs, which is always a big variable for network operators.
And about overheads, selling, general, admin expenses, SG&A.
Impressively, yeah, they cut SG&A by 3.2%. And what's notable is they did this even while increasing marketing spend. They needed to push revenue growth, push 5G adoption. So how? The reduction mainly came from a high base effect, basically less need for asset impairment provisions compared to the same period last year. It shows they're being strategic, investing where needed, like marketing, but finding deep efficiencies elsewhere in the back office, admin functions.
So Q3 wasn't just a good sales quarter. It was a quarter where a major structural cost burden eased up, allowing all that operational discipline to really shine through on the bottom line, give them significant breathing room.
Breathing room, exactly. But breathing room alone isn't long-term growth, right? So now we need to pivot to Section 3, how they're using that room. How are they reinvesting strategically into getting those quality customers, driving the ARPU engine? Because in a saturated market, real growth has to come from getting more value per user, not just piling on more users.
Let's start with mobile then. They had those stricter identity verification rules put in place, right? Liveness checks. That should slow things down. What did the subscriber base actually look like?
They're still the dominant player, reached 46.3 million mobile subscribers end of Q3, and they still manage a net increase of 271,300 subscribers in the quarter, which is healthy. Doing that despite those strict liveness ID checks for new customers, which analysts actually see as a good sign for customer quality. It shows their network is still a big draw. They can still attract net additions even while they're clearly prioritizing quality over just sheer volume.
Okay, now the crucial metric, ARPU. Average revenue per user. The gold standard here. What's the story behind the overall ARPU growth?
This is probably the most critical operational point. Overall, average mobile ARPU grew 5.2% year-over-year and 0.5% quarter-over-quarter. And this growth is directly linked to that value strategy, pushing users up the quality ladder, especially getting them onto 5G plans.
And drilling down the prepaid segment, that showed really explosive growth, didn't it? Almost surprisingly so.
It really did. Prepaid ARPU saw a strong sequential growth, 1.4% quarter-on-quarter, but the year-over-year growth, stunning, 9.5%. And the sources we looked at highlight this. It's the highest growth rate in the last 5 quarters for prepaid ARPU. This isn't an accident. It's attributed to their aggressive and apparently successful strategy targeting higher value prepaid customers, getting them onto tailored high data packages.
But hang on, a 9.5% spike in prepaid ARPU. Doesn't that suggest they might be pushing prices up hard? potentially risking churn among the lower-end price-sensitive customers. Is that sustainable?
That's a fair challenge, a necessary one. The analysis suggests it's not just blunt price hikes across the board, it's more about effective upselling and smart package segmentation. They're leveraging that strong 5G network to offer specific, high-value data bundles that attract people who genuinely need and use more data. So the shift is intentional. They seem willing to let go of some very low ARPU customers to focus on fewer, higher ARPU ones. The churn risk is mitigated somewhat because the customers they keep are demanding more value anyway. They're less likely to switch just over a few bats if they rely on that network quality.
Interesting. Okay, and how did the postpaid segment do? Usually more stable.
Postpaid ARPU softened a bit, which, less exciting than the prepaid jump. This was mostly put down to seasonal factors, specifically less revenue from outbound tourist roaming in that quarter, so likely a temporary dip linked to travel patterns. But overall, the quality focus getting users into higher tiers seems to be paying off big time, especially in that huge prepaid market.
And this all feeds back into the engine driving usage. 5G. How well are they turning that network speed into actual customer adoption?
The 5G base is absolutely key for their future growth. It expanded significantly, reached 15.8 million 5G users in Q3. That's now 34% of their total subscriber base, and it represents a very healthy 13% increase just from the previous quarter.
And this rapid adoption links directly to something called VOU, right? Volume of usage. We should probably explain that.
Right, VOU, volume of usage. As more people get onto 5G, they just naturally consume way more data. It's almost automatic. Think about it. You move from 4G to 5G, you stream more video, higher definition stuff, use more cloud apps. It just happens. This increased VOU inherently supports that rising ARPU trend because customers using more data are either on bigger packages already or they might be paying overage fees. So expanding 5G isn't just about network tech, it's the fundamental infrastructure supporting their whole ARPU growth strategy.
Okay, let's switch gears slightly. Fixed broadband. AIS fiber, the home internet side. Often overlooked, but important for stickiness, bundling. How are the metrics there?
AIS fiber is doing really well, actually. It's a key part of keeping customers loyal. They hit 5.2 million fixed broadband users in Q3, still growing subscribers robustly. More impressive, though, is the fixed broadband ARPU. It increased to 528 BARTs. That's up 4.6% year over year. And get this. That's the highest growth rate the fixed broadband ARPU has seen in 4 quarters. They're managing to raise home internet revenue per user where many struggle.
So what's driving that? Just offering faster speeds? Or something else?
It seems more sophisticated than just speed. It looks like a mix of attracting quality customers again, but also, crucially, value-added services. They're pushing these high-value integrated packages. And they're boosting retention by bundling unique content. The big example is having those exclusive Premier League football rights. When you bundle high-demand exclusive content with your high-speed internet, you can justify a higher ARPU, and it makes customers much stickier, harder for a competitor to lure them away just on price.
Okay, we have to talk competition now. The landscape changed with that big merger. How does ADVANC stack up against the new true entity?
Yeah, the competitive landscape is basically defined by that merged company now. But ADVANC seems to have a short-term edge because of its quality focus and the timing of its cost reductions. Analysts like Uanta, for example, expect ADVANC to keep doing well in Q4. They cite low immediate price war risk, maybe some government stimulus helping spending, and crucially, Q4 will be the first full quarter where ADVANC benefits from those lower spectrum costs after the NT contract expired in August.
So weighing risk versus quality. Is ADVANC the clear winner right now in the short term?
Well, it depends on what you value more, proven quality or potential future acceleration. Analysts at CGSI argue strongly that ADVANC is favored right now because of its superior customer quality. You see that in the high ARPU and its more stable, predictable EBITDA growth. While True might show higher growth rates later once merger synergies fully kick in and their own cost cuts happen, ADVANC currently has the advantage of stability, proven execution, and established customer value. CGSI specifically points out ADVANC's strategy targets those higher usage, less price-sensitive customers. That's the most profitable segment.
And there are other factors too, right? External things impacting the competition. ADVANC's growth seems more sustainable, maybe.
That's the argument. ADVANC is less reliant on those lower ARPU segments, which can be more volatile. CGSI noted that True's subscriber base might feel more pressure from, say, a slower return of foreign tourists or those stricter ID checks for foreign workers. Historically, those factors hit True's market share harder. Plus, on the fixed broadband side, analysts observe True subscriber growth is still lagging ADVANC. It suggests ADVANC is seen as the quality leader across both mobile and fixed lines currently.
Okay, let's pivot now. Section 4. From today's operations to tomorrow's strategy. The core telecom market is maturing, saturating. ADVANC can't just rely on ARPU bumps and cost cuts forever. They need to diversify. Seriously, what's the plan there? How big a shift are they aiming for?
It's not just tinkering around the edges. It looks like a major strategic shift. The CEO, Somchai Lertsuthiwang, has been quite clear. The goal is to boost non-mobile revenue stuff beyond basic connectivity from around 10% currently up to 20% of total revenue. And they want to do that within the next 3 years. Doubling that segment's contribution, that takes serious commitment, serious investment. It's a big pivot for a company built on mobile.
And they've laid out 3 main areas, 3 pillars to get that done. What are they?
The 3 core pillars are retail, entertainment, and digital finance. Retail means using their huge network of stores and their digital channels for more than just phones. Think IoT gadgets, smart home tech, using AI to personalize offers, manage stock better. Entertainment builds on things like that Premier League deal, using exclusive, high-value content to keep customers loyal, drive ARPU, turning the network into more of a platform.
Let's dig into the enterprise and connectivity side first. The B2B segment. Less visible maybe, but the sources highlight it as really lucrative and growing fast.
Absolutely. Enterprise services, B2B, showed really strong growth, up 17% year over year for the first 9 months of 2025. This segment tends to be high margin. It involves specialized solutions tailored for businesses, things competitors might struggle to match without ADVANC's massive infrastructure and technical know-how.
What specific services are driving that 17% B2B growth? It sounds like more than just business phone lines.
Oh yeah, way beyond basic lines. The focus is entirely on advanced digital transformation services. Growth is coming from demand for sophisticated connectivity. 2 main areas stand out. First, their interconnect service, EDS, that's things like machine-to-machine communication, enabling IoT for logistics, manufacturing. Second, advanced cloud services, everything from managed hosting to complex hybrid cloud setups. As Thai businesses manufacturing, logistics, finance especially push their digital transformation, ADVANC wants to be the essential infrastructure partner, capturing that high-margin corporate spend.
But the real headline grabber, the big bet for future growth, that has to be digital finance. The virtual bank ambition.
It really is. It's probably the single biggest potential growth opportunity they're pursuing, designed to leverage that huge existing customer base they have. The market potential for digital finance in Thailand is massive. ADVNC figures it can use its brand trust, its customer relationships, to acquire users much cheaper than a standalone fintech startup could.
And the partnership they've put together for this virtual bank.
Yeah.
It's critical, right? A real powerhouse team.
It's a stroke of strategic genius, potentially. They formed this alliance with OR, that's PTT Oil and Retail, and KTB, Krung Thai Bank. This isn't just throwing names together. This combination creates a group with arguably the largest combined physical and digital customer footprint in the whole country.
Let's break down that synergy. What does each partner bring?
Okay, ADVNC brings the digital pipes, the data analytics capability, and obviously that massive mobile subscriber base. Instant digital reach. Or PTT Oil and Retail brings an enormous physical network. Think all those PTT gas stations, the cafe, Amazon coffee shops, their logistics network, places where people already are, where digital services could be accessed, or where users already transact daily. And KTB, Krung Thai Bank, provides the essential financial plumbing. The banking license experience, regulatory know-how, the core banking systems needed for complex financial products.
That combined ecosystem. It gives them a huge head start, doesn't it, over anyone trying to build a virtual bank from scratch. When are they hoping to launch this?
The target launch date mentioned is July 2026. That's Thai Buddhist era 2569. Now, obviously, that depends on getting all the regulatory approvals from the Bank of Thailand. It's a complex process. But the level of commitment, the capital likely involved, the strategic partners, it signals this is a very serious long-term play, designed to be a major profit engine eventually and help hit that 20% non-mobile revenue target later this decade.
Okay, finally on strategy. Beyond these new ventures, how are they using tech to make the core business leaner, more competitive long-term? We talk cost cuts now, but what about sustained efficiency?
That's where AI integration comes in. It seems foundational. ADVANC is actively using AI across the board to streamline operations. This isn't just talk or pilot projects, they're applying it practically.
No.
Optimizing call centers, for instance, faster resolution, less human handling needed, using predictive analytics to make sales processes more efficient. The long-term aim is continuous improvement in operational efficiency. That helps meet those cost targets year after year, maintain that superior EBITDA margin. AI isn't just seen as a cost cutter, but also a way to improve the customer experience and stay ahead technologically.
Okay, Section V, let's pull this all together. We've seen strong fundamentals, the Q3 operational success, the ambitious strategy. What does the professional investment community make of it all? What's the analyst consensus target price?
Right. Based on the latest reports we have looking at input from about 23 analysts, the average consensus target price for ADVNC is sitting at a pretty confident 334.14 Thai baht.
That's strong. Suggests decent upside from where it's trading.
Yeah.
What's the range of those estimates? Is it wide or fairly tight?
It's relatively tight, actually, which you often see with stable blue chips. Shows high confidence in the floor, at least. The highest target out there is quite aggressive, 365.0000 baht. The lowest is still firm at 300.000 baht. The fact the stock often trades nearer that low end suggests maybe investors are waiting for more catalysts, but the analysts clearly believe there's substantial, well-supported upside potential based on the fundamentals.
And the actual ratings? Buy, sell, hold. Are they uniformly positive?
Overwhelmingly positive, yes. The consensus leans heavily towards strong buy or outperform. You see targets like Uwanta at 334 Banta, KS Securities at 331.32 Bant. Even InnovestX, which has a lower target at 300 Bant, still rates it outperform. And CGSI stands out. They specifically name ADVANC their top pick for the entire telecom sector. That's a strong endorsement of its relative strength.
When CGSI calls it a top pick, what are the key reasons they give? What makes it stand out versus, say, True?
CGSI points straight to ADVANC's solid foundation and execution. Key advantages they cite: its strong balance sheet vital for funding 5G, the virtual bank, its quality customer base delivering that superior ARPU growth we talked about, and its proven track record of delivering stable EBITDA growth, predictable cash flow. In their view, ADVANC represents reliability and better execution right now. They also note that the long-term ARPU trend is supported by users adopting more data-hungry habits, smartphones, AI apps, etc.
Okay, but this brings us to that really interesting nuance point in the research. The ADVANC versus True debate. We see some analysts recommending buying ADVANC, yet saying they actually prefer the competitor, True. Why this seeming contradiction?
Yeah, this is where the investment decision gets really strategic and, frankly, personal for the listener. Depends on your risk appetite, your time horizon. Analysts like InnovestX, like KS Securities, they rate ADVANC positively, but express a preference for True. Why? Two main reasons, and they're linked. Both essentially revolve around valuation and future potential.
Okay, reason one. Perceive higher future growth potential for True, the merged company.
Exactly. True is seen as having potentially a steeper growth curve ahead if it successfully executes its merger integration. It has, arguably, more room for improvement, more cost-cutting potential, integrating assets. Compared to ADVANC, which is already pretty lean and efficient, True is playing catch-up, in a way, and sometimes growing from a lower base or through restructuring leads to higher percentage growth rates, at least initially.
And reason two is pure valuation metrics. And here, analysts often prefer EV/EBITDA for telecoms, right? Not just PE. Why is that important?
Critical point, yes. EV/EBITDA, enterprise value to earnings before interest, taxes, depreciation, and amortization, is generally seen as better than the simple PE ratio for analyzing these big, asset-heavy infrastructure companies. PE can be misleading because telecoms carry huge amounts of debt, which EV includes, and have massive non-cash depreciation charges, D&A. EBITDA is a much better proxy for the actual operational cash flow being generated, so EBITDA tells you how expensive the whole business, debt included, is relative to the cash it's churning out.
Okay, so using that EV/EBITDA metric, True looks cheaper.
Correct. Currently, True's valuation on an EV/EBITDA basis is considered more attractive or cheaper. Why? Because analysts expect a massive boost to True's future EBITDA that they believe isn't fully priced in yet. Post-merger, the potential cost savings True could get when its spectrum costs eventually expire are estimated to be much larger than ADVANC's. Maybe 6 billion baht for True versus the 2 billion baht ADVANC just realized. The argument is that this future potential windfall for True isn't fully reflected in its current share price, making it look like a better valuation play if they deliver.
So the investment choice for you, the listener, boils down to stability and current income. ADVANC versus potentially higher but more speculative future growth tied to successful merger execution. TIRU.
That's the core decision in this sector right now. Established quality versus promising potential. It's a classic investment dilemma.
Which leads us perfectly into the final section, Section 6, dividends. Many investors look to market leaders like ADVANC for income. We asked at the start, is this dividend stock still reliable? Especially with big spending needed for 5G, the virtual bank.
The verdict on dividend reliability, unequivocally positive. In fact, there was a major positive surprise here, quite unexpected. Management announced they're raising the dividend payout ratio. It was already high, around 90%. They're lifting it to 95% of net profit.
Wait, hold on. 95% payout. It's extraordinarily high. I have to push back here. Doesn't that risk starving the company of cash needed for crucial future investments? The 5G build-out isn't cheap. Launching a virtual bank takes capital. Isn't this prioritizing today's shareholders over long-term needs, especially when TREUE is focused on synergies?
It's the absolutely critical risk assessment, yes. And management's defense, the reason analysts mostly like the move seems to be threefold. First, those structural cost savings we discussed from the NT contract expiry. That provides a big, predictable boost to cash flow, easing operational spending pressure. Second, ADVANC has historically been very efficient with its capex. They tend to get more bang for their buck, network-wise, than rivals. And third, this move signals incredible management confidence in the sustainability and stability of their future cash flow. It's basically a statement, we're so profitable, so efficient, we can afford this huge payout and fund our strategic projects.
So they're essentially saying their operational engine is so strong they don't need to hoard cash, like maybe a company undergoing a massive integration would.
Precisely. It reinforces that image of a mature, efficient infrastructure player. Historically, their policy since 2017 was to pay no less than 70% of net profit. Jumping to 95% is the clearest signal possible of their belief in steady operations and maybe minimal regulatory surprises ahead.
And the sources even touched on the history behind this high payout philosophy, didn't they? Linked to the Thai telecom sector's past.
That context is interesting, yeah. The company has long favored high dividends as a fair return. Partly, it's the business model. It acts like an infrastructure fund, generating steady cash. But partly, it's also been influenced by historical political risks around concessions in Thailand. By paying out consistently high dividends, management reassures shareholders they're getting returns even if long-term asset values face unforeseen political or regulatory shifts. It builds trust over time.
Okay, let's get concrete. What dividend yield are analysts forecasting now with this new 95% payout policy?
Analysts are projecting strong, attractive yields, confirming its income appeal. The forecast dividend yield is estimated at 4.11% for 2025, rising to 4.57% for 2026. And this lines up with the expected profit growth. Core profit is projected to hit nearly 45 billion baht by 2026, providing a solid growing base to support those very high payouts.
Okay, beyond the financials, let's quickly look at the stock price itself. Technical context. How is the market reflecting this stability?
The price action really mirrors that strong fundamental belief. As of early September 2025, the stock was trading around 299.000 baht. That puts it very close to its 52-week high, which is 309.000 baht. Reflects consistent investor confidence.
And the intraday movement, what does that suggest?
Looking at a typical day back then, open 299, high 300, low 297, it suggests this balance. There's strong underlying demand, belief in the fundamentals, but you also see some short-term profit taking, maybe some resistance right around that 300 baht psychological level near the high. The fact the price stays firm, stays high despite hitting that resistance reinforces the view of ADVANC as a really stable holding, supported by solid fundamentals and now that exceptionally attractive dividend policy. Really acts like an anchor in an income-focused portfolio.
Yeah, its ability to hold near those highs, even without needing splashy speculative growth news all the time, really speaks volumes about market trust. Trust in the earnings quality, trust in the dividend reliability. All right, this has been incredibly thorough, a real deep dive into ADVANC. Let's bring it all together now. Conclusion. Does ADVANC still hold that title? Stable market leader with good dividends, especially in this tough, saturated market.
Based on everything we've seen in the Q3 2025 data, absolutely yes. The results were genuinely spectacular, driven by those key structural cost savings, disciplined operations, and a really effective strategy boosting ARPU through quality-focused 5G across both mobile and fixed broadband. Their B2B growth is strong, providing diversification. And that virtual bank partnership, while long-term, shows clear strategic direction for future growth beyond core telecom. And then, that aggressive 95% dividend payout hike. It's management shouting confidence in future cash flow. It absolutely cements its position as the premier reliable income stock in the Thai telecom sector right now.
So, established. ADVANC is strong, stable, pays a great dividend. Yeah, we have to end by circling back to that core investment question, the one raised by analysts comparing it to True.
That really is the ultimate choice for you, the investor, looking at this sector. They're both significant players, but offer very different things right now.
The final decision really hinges on what you prioritize. Your personal goals, your time frame. Do you value the high, reliable, current income stream, the proven corporate stability offered by the established dividend leader, ADVANC? Or are you willing to accept less current income, perhaps more uncertainty, to chase potentially higher capital appreciation down the road? Betting on the perceived growth stock with the cheaper valuation, P Shui, hoping it successfully navigates this merger and realizes those bigger cost savings. Simply put, stability and cash flow now, or a bet on future capital growth later. That choice really defines what kind of investor you are in this space. How is our in-depth look at ADVANC? We hope this information helps you decide whether this #1 stock is right for your portfolio. If you have any questions or would like us to analyze a specific stock, please let us know. Finally, don't forget to like, share, and subscribe to support our team. Thank you.